Dear students, I have come with the new module, module 4, and you know that we are doing income tax new series. So the title is Features of Income for Income Tax Purpose. So what I will do first, I will list the features. Then each point I will explain. So if you list the features, first point is it's a definite source. Second, income must come from outside. Third, tainted income. Fourth, diversion of income versus application of income. Fifth, temporary versus permanent income. Sixth, reimbursement of payment made on behalf of others. Seventh, dispute regarding the title. Eighth, income in money or money's worth. Tenth, income of an assessee. Ninth, income of an assessee. 10th, treatment of gifts. 11th, income includes loss. Next, surplus from mutual activity. Then, no double taxation of income, tax treatment of income, heads of income, distinction between exemption and deduction, gross total income, rounding off of total income and rounding off of tax. So, these are the points I am going to explain. So, let us start with the first point. So, it's a definite source. First point is it's a definite source. We know that we have 5 heads of income. Income from salary, income from house property, income from business or profession, capital gain and income from other sources. So, whatever income we are putting into tax should be able to include in any of the heads mentioned. 5 heads mentioned. It can be from salary, rental income, anything. Second point is income must come from outside. Must come from outside. Now what is the meaning of income must come from outside? So I am doing a service. If I am working in an organization, I will get salary. That income is coming from an outside source. If I have a house property to let out, I am getting income from rental income. So that is coming from outside. That is the meaning of income must come from outside. Now, I will give you certain questions. Following transactions are income or not? Interest earned from fixed deposit. It is definitely income because it is coming from bank. Salary paid for own business. It is not an income because nobody can pay salary for whatever the work we are doing. See, for example, I will do household work. Nobody will give me the salary. Transactions between head office and branch, it's not income because these are the internal transactions. Profit from selling goods to customers, yes, it's a definite source of income. I hope you got the meaning clear. Now what is the meaning of tainted income? That is the third point, tainted income. Tainted income meaning we can earn income from legal activities and illegal activities. See, if I am doing smuggling, black marketing, hoarding, selling drugs or anything like that, I will get income. But Income Tax Act is not distinguishing between legal income and illegal income. If I am getting salary, it's a legal income. If I am getting rental income, it's a legal income. But I am doing an illegal activity and earning income, that also will be put to tax. So you have to remember that Income Tax Act is not distinguishing between legal income and illegal income. Now, diversion of income versus application of income. Diversion versus application. See, diversion of income versus application. See, for in divorce settlements, there will be a court order. Whatever the income earned by the spouse directly should go to the person, husband or wife, ex-husband or ex-wife. So that is diversion of income. Income is not reaching the assessee. That meaning it is not treated as his income. The point you have to remember is before the income reaches the assessee, it is going somewhere else. He has not received that income. That is the meaning of diversion of income. Whereas application of income meaning assessee received the income and then they are spending it. See, for example, that same person received income. Assessee received income. But after receiving, he is paying rupees 10,000 every month to his parents. That is application. That will be taxable. Here the difference is that in application of income, assessee has received the income. Next point is temporary or permanent. Temporary versus permanent. If a salaried employee, he will get regular salary, that is permanent income. But if he is getting a lottery, he will win the lottery, that meaning it's a temporary income. Both will be taxable. Now, next point is reimbursement of payment made on behalf of others. Reimbursement. Sometimes we will be asked to make the payment, later somebody else will repay that. This is quite possible in agent and principal relationship, the transactions between head office and branch. So what they will do, the branch office sometimes they will be spending, later head office will be reimbursing. It is not treated as income because it's only an internal arrangement. You are paying that, later you are getting reimbursed. So when an agent makes a payment on behalf of principal and later gets reimbursed, it is not considered as income in the hands of the agent. Now dispute regarding title of income. Sometimes court cases will be there. Their ownership, who is the owner, who has to receive, that matter will be in the court. So here you have to remember, if the matter is in court, whoever at that moment receiving the income, they are liable to pay the tax. Next is income in money or money's worth. Money or money's worth. Money or money's worth. When we are getting salary, if you are a top level employee or a senior level employee, you may be getting other benefits. That car, official residence, gardener, cook, all these benefits you will be getting. So some amount you are getting as monetary benefit, some amount you are getting as other benefits. So here you have to remember that whether you are getting as money or money's worth, it is taxable. Now how you will convert money's worth things into taxable amount of salary, we will learn in detail in salaries chapter. Now income of an assessee. Income of an assessee. Income of an assessee meaning all the income he has received from 5 heads of income. There will be bank interest will be taxed under income from other sources. Rental income from house property, salary, then income from business or profession, and if he got a capital gain. All the heads of income will be clubbed together and that will be treated as income of the assessee. Now treatment of gift. This is important point you have to remember. Gifts. If a person is receiving a gift from more than one person exceeding 50,000, one person or more than one person exceeding rupees 50,000, it will be taxable in that year of receipt. So the exemption limit for gift is 50,000. Gift, you know that somebody is giving you something without any consideration. So that is up to 50,000 is exempted. It's not necessary that you have to receive from one person. If you are receiving from more than one person, the aggregate or the total amount will be considered. Now income includes loss. So this is an important concept. This is an important concept you have to remember. Later you will learn set off and carry forward of losses. So here income is considered as positive income. Loss is considered as negative income. So if you are getting positive income and negative income, we have the certain adjustments possible. In that year, if it's not possible to adjust, you can carry forward that for future years. That is the meaning of income includes loss. Now surplus from mutual activity. Next point is surplus from mutual activity, meaning, see, we are housing cooperative society or an apartment association. We will be giving all the house owners will be paying the maintenance. So sometimes leftover amount will be there that they will be used to meet the future expenses. So that will not be taxed. But remember, if this association got a bank account, if they are earning bank interest, that will be taxable because it's coming from outside. So the Maintenance charges paid clubbed together, they will be maintaining the apartment with them. It is, if any leftover amount is there, it is not taxable. But if they are getting an income from bank interest for their deposits in the name of association, it will be definitely taxable. Now, no double taxation of income. No double taxation. You don't have to pay tax twice for the same income. Salary or rental income, any head of income, if you are getting income, only once you have to pay the tax. Now, tax treatment of income. Tax treatment, taxable income, exempted income, and rebatable. Three heads are there. One is taxable. I told you 5 heads of income. If you can include in that head of income, it will be definitely taxable. Exempted income. Income from agriculture within India. It is exempted. In the case of government employees, commuted value of pension is exempted. In the case of government employees, gratuity is exempted. So like that we will learn exempted incomes under section 10. So that is another category. Now rebatable incomes are there. Rebate is government. Now you know that the up to 12 lakhs if you earn income, you don't have to pay tax including the rebate. So government will change the provisions accordingly. So that is, there are 3 types of income: tax treatment of income, taxable income, exempted income, rebatable or tax-free income. Next point you have to remember, what are the heads of income? What are the heads of income? Income from salary, 5 heads are there. Income from salary, income from house property, income from business or profession, income from capital gain, income from other sources. These are the 5 heads of income we will be learning in detail. Now, exemption versus deduction. Exemption versus deduction. Certain incomes are exempted. An exemption means certain income is not charged to tax at all. Already I have mentioned commuted value of pension and gratuity for government employees and agricultural income from India. It is excluded from the total income. But a deduction is allowed from the gross total income, section 80C, 80G and all you will learn in detail. That is, a deduction is an allowance from the gross total income to arrive at the total income. So both the terms are different. Exemption not included in the income, deduction meaning you are getting an allowance, you are not paying the full amount as tax. Now, next point you have to remember, what is gross total income? Gross total income, we always use GTI, gross total income. This short form you have to remember. Gross total income meaning income from all 5 heads of income. What are the 5 heads of income? Income from salary, income from house property, income from business or profession, income from capital gain, income from other sources. So when you combine all the incomes under these 5 heads of income, it is called the gross total income. Next is total income. So once you get the gross total income, the total income meaning total income is equal to gross total income minus deductions from 80C to 80U. This you will learn in detail. These are the deductions allowed. So deductions 80C, 80G, 80E, so many deductions are there, we have to learn in detail. Now rounding off of total income. Always you have to remember, any transaction with the income tax department, it should be in multiples of 10. The value you have to round off. See, for example, the value is 1,25,683. See, any value, the last value you have to check. If it's less than 5, you will take the nearest 10. If it's above 5, you will go to the next 10. So that meaning this value will become 1,25,680. Imagine if it was 1,25,686, this will be 1,25,690. That is how you will round off. Always transactions you have to remember, you have to round off the value. Now the last point I want to explain, rounding off of tax. See, for example, when you are paying tax, there also you have to remember it should be rounded off to the nearest 10. Imagine the tax payable is 2,374. same rule will be applicable. This value is less than 5. So the tax payable is 2370. If this value is 2377, the value will be 2380. So any value, any payment you are making with the income tax department, it's rounded off to the nearest 10. So this is what I wanted to explain in this module. Happy learning. Thank you.